Welcome to Hacking the Hustle. This is your host, Benjamin Sklar, and I'm really excited to have Michael Rabin on the podcast today. What's up, Michael?
Rabin, but it's all good. No one guessed that one
right. Oh, thanks for the correction. Michael is the managing partner of Fortified Property Group, which is a commercial real estate investment and advisory firm based in Los Angeles and Bethesda, Maryland. And I'm excited to have him on the podcast to talk about what's going on in the commercial real estate market and hear his personal story of how he got in the business and what are some things that he sees going on right now that he can share with us. So we'll start it off. Michael, tell us a little bit about how did you get into this business?
Yeah, thank you. Thanks for having me. Excited to be here. I'm locking the door so I don't get any little visitors in my home office. So so how did I get into this business? When I was a little kid, my grandfather, who was a dentist by trade, his side hustle was buying land and entitling land and selling it to developers. And from the time I was as far back as I can remember, I was in a car on the weekends with my dad and my grandfather driving around looking at sites, that he wanted to purchase, sites that he owned, sites that he had owned and entitled and sold. And so when, I grew up and had to make a decision about what I wanted to do with my life, it seemed like real estate was, a natural selection for me. Mm-hmm. And so when I was in college, and my father by trade is a real estate attorney. And so I was always dialed in my entire life, to a fairly deep real estate network, his friends, his work colleagues, his clients. And my father started investing as a principal, a couple decades ago. And so I was always, exposed to his phone calls, and he would talk to me about what he was doing. So it became kind of second nature to me at a certain point. I interned in, summers in college. And when I got out of college, I grew up in Maryland, in a suburb of DC. And I was working with my uncle for a company called the Mark Winkler Company that was later acquired by Duke Realty. And I was there for about a year. And I was trying to make my way up to New York City. And I had a family friend that was close with Larry Silverstein. And my family friend said to me that he was going to try and get me a job with Larry. And, he came back to me and he said to me, Larry doesn't hire anyone unless they've gone through the real estate program at NYU. And, that was the first time I had heard about the program, didn't know about it before, and started looking into it. And the next thing I knew, that next fall, I was up in New York starting classes there. So I thank Larry Silverstein, even though he doesn't know, who the hell I am, for, helping to launch, my career mm-hmm. in the real estate investment business.
For sure. For those listening who don't know who Larry is, he is the real estate developer who built the Freedom Tower, and he's also a Brooklyn Law School alumnus, FYI. So proud of alma mater right there. So was the NYU program worth it? I'm
going to parse my words carefully. Yes, it was. I mean, look, it's the type of experience where you have to get just as much or more out of the outside of the classroom as you do inside the classroom, because they provide you with incredible access, right? They connect you with, real people in the industry. They help you get jobs. You have access to tons of conferences, networking events. And so you really have to take advantage of that. Mm-hmm. That's the meat and potatoes of our business. And, and there was also some great teachers. So I learned a lot, as well in the classroom, but I have no regrets. It was a great experience.
Right. That's good to know. Yeah. So a lot of my listeners are either passive investors in real estate deals, either through syndications or through apps on their phone, or they're either brokers in the city. And I'm sure I personally am interested, as well as I know my friends are interested in starting a commercial real estate investment firm like you have. If you could go back to the months before you started, what information do you wish you had known beforehand?
That's a good question. I would actually go back, I would rewind years. And I try not to have any regrets. The only regret I have is not doing what I did earlier, right? I mean, I had the idea of wanting to go out on my own many years before I actually did it. And I even chased literally hundreds of deals on my own before I went out on my own. And, it was because I was trying to keep one foot in the door, at a job, and one foot in the, entrepreneurial door. But it's kind of hard to do both in our business. And, even when you're doing a small deal, they take on a life of their own, and they can be just as much work as a larger deal. So I think, you have to, we're all kind of in some way betting on ourselves, right? Mm-hmm. So if you can really come to terms with that concept, and, you're in a position where, in terms of your knowledge base and your skill set, to make a bet on yourself, you got to rip the Band-Aid off, and you got to just do it. Our business is not rocket science. At the end of the day, you just need a deal, right? Mm-hmm. That's the special sauce in our business. Everything else kind of comes together, including, the equity. I think that a lot of young guys I talk to who are interested in striking out on their own always come back to, I don't have the capital to put up contract deposits. I don't have the capital to do due diligence. I don't have to sponsor equity. And I always say to those people, you're completely focused on the wrong thing. Mm-hmm. That component, the equity component, is a very important one. But if you have a good deal, the money will follow, mm-hmm. right? And it may not be the cheapest capital, your first deal or your first few deals, or it may not be the most ideal structure, and you may be having to give up, seemingly, a chunk of your sponsor economics. But you should never, in the beginning, you should never be chasing the last dollar. Mm-hmm. You really want to be focused on, getting into the game, mm-hmm. because it's actually a pretty, interesting phenomenon. Once you get in the game, the opportunities just start to arise. Like once you have done your deal and you can actually socialize it with people and tell people, this is who I am, and this is what I'm doing, and this is what I'm focused on, people will take you seriously, and they'll start to show you opportunities and connect you with people. And so it's really just about, finding that deal.
Mm-hmm. It's really good advice. I'm one of those people who also worries about the capital sources and not having the track record, and so it's good to hear you express that point of, you just got to find the good deals, buying right, finding the opportunities out there, and the things will follow.
Yeah, and I would also say, for those people listening who ultimately want to be on their own, and they're not they're my kids killing each other out there. For people who just aren't there yet, but they want to get there, I would tell you, the most linear approach would be to chart a path, right? So determine what you know today and where you are today in your career, and, where you want to go, and fill in the gaps, right? Mm-hmm. What you need to know and what you need to do between now and then, mm-hmm. and then go chase that, right? Mm-hmm. Because again, our business isn't rocket science, pretty straightforward.
Mm-hmm. Right. So I want to tackle that point. You can know so many things, but talk to me about the mindset. I know there's a lot of people, who, including myself, who want to get into commercial real estate, see the opportunity in regards to getting out of the rat race, financial freedom, all the things that Robert Kiyosaki preaches in his books and YouTube videos. So, but then when you go to LoopNet or Reonomy and you spend an hour or two a day looking for deals, and you kind of give up because you don't find anything, what kind of mindset does someone need to have to constantly be persistent and think long term and trying to make something happen for themselves?
So it's a really good question. There's a lot of things that need to happen and need to come together in order for the sun, moon, and stars to align, and for you to, get that first deal, in motion and underway. But look, there's so many. I mean, what's great about our business is there's no defined, approach, right? There's so many different ways to get into this business, and the barriers to entry are incredibly low, I would argue, but for having that entrepreneurial mindset, that's what the differentiator for people, right? So, for example, if you're a broker and you want to get into this business, you're a retail broker, let's say, you're likely going to, start to comb through, retail opportunities that you understand, right? And that are familiar to you. And, you'd go about it that way, trying to, identify an opportunity that you can understand. Someone who isn't necessarily directly in the game, or they are, but, you're a real estate attorney and you're just not, tearing through deals every day and you need to know where to start. I would tell you that, you need to develop strategic relationships. Like, for example, one incredible strategic relationship to have in this business is leasing brokers, right? Leasing brokers probably are one of the most disparaged players in our business. But like, I would argue that, they really hold two keys to the kingdom in our business. One is that they're making the market for our revenue streams as investors, right? Because they're representing landlords and they're representing tenants. So they have data that no one else has on how decision-making is happening at the landlord level and at the tenant level, and the trends in the business, right? And that can really inform you to how to make, strategic investment decisions, right? By aligning yourself with a leasing broker. The other key that they have is they arguably have the ear of the landlord more so than any other player in the business, because, they're representing the landlord. Landlord leasing rep is representing the landlord on leasing their property. So there's no one else in the business that's talking to the landlord more than the leasing broker, right? Not an investment sales broker. And so, it would behoove you to really align yourself with some leasing brokers that you trust, that are, in a perfect world, similar age to you, people that you're gonna grow up with in the business, and make them part of your team. And we've actually had tremendous success doing that, and having leasing brokers bringing us tons of opportunities that we've acquired. And, in exchange for them being like a strategic partner, in a certain sense, we give them a piece of our promote.
Wow.
And so, you'd be surprised, but not a lot of guys in the business are willing to do that. Not a lot of guys want to give up their promote. But if you really boil it down, if it's the difference between having the opportunity to buy a deal versus not, it makes all the sense in the world.
Right. That's really interesting. That's great advice. So I want to turn the page and change the topic and talk about what you're seeing in the market. What are trends that you're seeing? How has COVID changed the commercial real estate industry from your point of view?
Yeah, I mean, it's a really good question, and one that I can attempt to answer. And I think it's one that, doesn't get, a fair answer until we've obviously come out of this. But, what we're seeing, so we're fairly diversified in terms of the property types that we own. We own retail, we own office, we own flex, we own industrial. So we've been fortunate to be able to see it from a few different perspectives. as the different landlord hats that we wear. And I think that, you know, we've dealt with the same pain that every other landlord has, which is, you know, rent collections and dealing with lenders. And it feels like we've gotten past the most challenging parts of those asset management efforts, hopefully. But, you know, we're still left with a lot of tenants who are somewhat paralyzed with respect to, you know, forward planning. And so it makes it very difficult to have discussions with tenants about renewals, about, you know, their current footprint and whether they're needing to downsize. And, you know, it basically flows, you know, up to the landlord, and it, you know, leaves us a little challenged in our ability to plan, right? And so we're having a lot of asset management challenges, knowing what direction, you know, the business plan is going, and the asset, you know, ultimately assets going. And, you know, it's making us rethink, you know, our original pro forma, and it's making us rethink major decisions like when we're going to refinance and how we're going to refinance and what kind of leverage levels we want to take on at this point. So, and it also makes it pretty challenging to evaluate new opportunities, right? Because, you know, you now have an uncertain revenue stream at the property level, because it's hard to underwrite tenants. It's just, you know, you're really, it's a lot of guesswork in terms of who's going to thrive, who's not, who's going to survive. And so, you know, evaluating new deals is a little bit challenging. I would tell you that, and, you know, I mean, some of the other just kind of macro level trends that I think are, you know, affecting the ability to evaluate both properties within your portfolio as well as new opportunities is just all the changes, the trends that are coming out of COVID, right? It's like changing, there's ever changing consumer spending habits. You know, travel has changed. I think that there's, I mean, clearly there's, you know, shopping and eating, you know, has changed, and who knows if this stuff is temporary or here to change, or how it's going to evolve as the pandemic goes on. So there's a lot of that. Now on the new deal side, I would tell you, you know, there's what we've seen generally is the capital markets are a little bit seized up right now, as everyone knows. They've loosened up, but on the debt side, you know, there's a lot of lenders who are just sitting it out right now. And, it's a combination of they are licking their wounds, and just, you know, managing their existing loan portfolios, as well as a lot of uncertainty surrounding, you know, various property types. Like, for example, most lenders don't want to lend on hotels and retail right now. We are seeing lenders being fairly bullish on industrial. And on the equity side, you know, there's some equity out there that's active. There's also a lot of equity that's similar to debt sitting on the sidelines, because they're waiting for what they call a price discovery. Everyone's kind of looking and waiting for everyone else to jump, right? People want data, they want to see trades, they want to see comps, and they don't want to be the first to move. And I think that, you know, for us, where we tend to thrive is, you know, call it the middle market space, which I would say is in the, you know, $5 to $30 million range, let's say, where you know, the competition is a little whittled down in the sense that it tends to be too big for the mom and pop investors and too small for the institutional investors. So we're kind of left sitting across the table from, you know, smaller, you know, boutique investment guys like ourselves. And there's just, you know, most of our portfolio is in DC, Maryland, and Virginia. And in those markets, there happens to not be a ton of competition in that space. Furthermore, during COVID, the competition has kind of dried up, and we find ourselves being the only ones at the table when we're chasing a deal in some cases. And so, our thesis, and you can ask me in like 3 to 5 years how this plays out, but is that we've seen this movie before, and when the capital markets seize up, right, and lenders don't want to lend, and equity providers don't want to provide equity, there becomes an inefficiency in pricing, right? And so we kind of look at this now as a window of opportunity to go in and be bullish and buy, as much as we can. And so we've been pretty active in the industrial space. And so, pre-COVID, and it wasn't just by design, during COVID, because everyone knows, I think it's safe to say everyone knows that industrial has fared pretty well during the pandemic, and better than most property types. And so, we've been fortunate. We were kind of, out there in the industrial space pre-COVID, and we're just, continuing to work in that space. And specifically, we have a couple different strategies in that space, and one of them is buying institutional quality assets that are sub-institutional in size. So, they're too small for the institutional investor to focus on, and with the idea that we're going to roll up, a portfolio of these and sell them in an institutional exit. So, create an arbitrage opportunity for an institutional investor who wouldn't focus on them individually, but as a portfolio they would. So yeah.
Amazing. You just said a lot of good stuff in there. I want to unpack that. I'm curious, what blind spots do you feel like you have 5 years from now when you look back on your thesis? What do you feel like you could miss?
That's a really, really good question. I don't know. I think you don't know what you don't know, and I guess you try to have no regrets. I think that I would probably look back and say, should have bought more.
Yeah, that's great.
But it's hard to pick off the blind spot.
Mm-hmm. I heard someone say last week that this decade is the decade of multifamily. What's your response to that?
I'm not a multifamily guy, so I'll take that person's word on it. I think that multifamily has definitely proven to be a pretty strong asset.
Mm-hmm. If you wanted to be a multifamily guy, could you just get into it, or are there barriers to entry?
Yeah, I mean, there's barriers to entry in the sense that there's a lot of guys out there in that space who can do it much better than us. So there's got to be a good reason for us to want to get into it.
Mm-hmm. Better in what way? Like their ability to analyze the deal and manage the property?
Yeah, just understanding the space. And again, like I don't think anything in our business is rocket science. So sure, we could get up to speed on it. And we're involved in some multifamily deals from a co-investment standpoint. But we just don't own and operate multifamily ourselves. Yeah, I think it's, once you have the infrastructure to, execute on transactions, sure, you can go into, you can kind of transition into other asset classes, but I don't think, is that,
No, we're good.
Oh, we're good. Okay.
All right. So before I let you go, I want to do a quick fire round Q&A where I throw questions at you and you throw me back yes and no, quick responses. Okay.
Sure.
If you had to choose one city to invest in, what city would you choose? Oh
man, that's a tough one because we're pretty all in on DC, Maryland, Virginia area. So I'm going to go with that one.
I respect that. Do you need to have a real estate salesperson license to get into commercial real estate?
I don't have one, so I'm going to go with no.
Nice. Okay. Do you need to be good at Excel, or can you have your partner be good at it and you have other roles in the business?
I have a partner who tries to stay out of Excel as much as possible. So you can definitely have partner or partners with complementary skill sets.
Okay. Do you need to pay for a software platform to analyze deals and find opportunities?
I think you can get by just fine with Excel.
I mean, like I'm talking about like LoopNet or
okay.
like that kind of software platform.
No, I don't think so.
You would recommend LoopNet and you're good to go. For anyone listening right now who says, all right, I'm gonna start trying to get into the business.
Yeah, wrong place to start spending money, I think.
Okay. What asset class would you recommend a rookie investor try and get into?
I think a pretty easy and bread and butter type of property to own and operate would be like a flex property, which is, it's a single story, kind of office warehouse combination where you pull up to the front, the door's there, you walk in, like the first third of it is built out office space. The back 2/3 is, open warehouse, and it's it's tenants who need combination. It's an easy asset class, low rent, stays, in the right, location, stays. It happens to be the cheapest rent alternative in town. So it stays pretty well leased.
All right. Good to know. All right. So last question, not business related. If there was one thing you could do to improve this world, what would you do?
Oh man. What would I do? I can't help but think about how polarized, the world is today.
Mm-hmm.
Not just domestically, but globally, on every level, right? Like religious, ethnic, cultural, social, political, everything, right? And so, I have 3 young kids and constantly and thinking about, the world we live in and raising them in this world. And so, if there was something that could do to kind of break down barriers and, find a way to better understand each other and respect each other and kind of get rid of, a lot of the hatred and the oppression and violence in this world, I think that's where I would, want to focus my time.
Really good. I really like your answer. I couldn't agree more. So where can people reach out to you if they want to get in touch?
Michael at fortifiedproperty.com. Happy to talk to anyone. Always
amazing. Happy. Awesome. Thank you so much, Michael. It's great to have you on the show and
it was great.
Appreciate it.
All right. Take care. All the best.
See you, Michael.